Hi everyone, this is Jason Burek of Wall Street for Main Street. I'm just going to do a short video today showing you what I think are some of the real world problems that silver under $16, in fact quite a bit below $16, according to this Kitco chart. Kitco price that I have now is around $15.50 now. Silver at those prices can cause to real world. So let's first start off with Coeur d'Alene Mining. For those of you who are not familiar with Coeur d'Alene Mining, you can go to their website here. One of the ways I look at costs is to go through investors' presentations. Normally now with the industry, they don't just list cash costs anymore. They also list all-in sustaining costs, but there's also problems with that. If you listen, but the all-in sustaining cost is the most accurate measure of costs, and while it's not perfect, it is a lot better than the cash cost measurement that they used to. That the gold and silver mining industry used to give out. Listen to my Nolan Watson interview I did yesterday, on Thursday, where he talks about how a lot of miners have basically cut all the costs they possibly could to the bone, and there's not really any more cost for them to cut. Maybe they can cut a little bit here or there, but they're ruining the mine long term. And there's really not many more costs left to cut without either shutting down mines and or the mine going bankrupt. The mine can obviously run at a loss for a while, but then if the miner has a bad balance sheet and they have a lot of debt due and they don't have a lot of cash on the balance sheet, there could be huge, huge problems for the miner. And we're in an environment now where there is some capital available, debt or equity, but it's at punitive penalty rates. So, you know, if your stock price is down a lot, you're not going to be able to sell a good amount of equity at a good valuation. And it's even worse than that for debt in a lot of cases, unless you have a really low-cost mine and good cash flow at the mine. The mine has stable production. So Coeur d'Alene is one of those companies. For those of you who are not familiar, Coeur d'Alene produces approximately 16 million ounces a year of silver. They're a senior silver producer. They also have been adding a lot of gold production. And I think this goes to what Nolan Watson also said, that it's just once you get up to that level of annual silver production, it's really hard to routinely keep all of your revenues in silver. So Coeur d'Alene I'm on Coeur d'Alene's investor presentation. If you want to go look at it yourself, it's here June 20th that they presented to Goldman Sachs about how gold and silver, they do this to a lot of banks and a lot of conferences, how gold and silver miners are undervalued. So here I'm on slide 5, and they're talking about how from 2014 to the first quarter of 2017, they have reduced their cost by 26%. It's an impressive amount, but look how long it took them to do that. And the silver bear market started in 2011. So they weren't able, mines are very complicated. There's a lot of moving parts. They're very capital intensive. Dozens of things can go wrong in a mine. You cannot cut 26% costs at a mine overnight. So it literally took them from 2011 to first quarter 2017 to cut their costs by more than 26% as the silver price was basically crashing with paper price manipulation. So, you know, I think this is an important thing to highlight here. The other thing I want to highlight on their presentation is, so this is one of their cost measurements here, talking about it mentions adjusted all-in sustaining costs and gold silver equivalent ounces. So they have one low-cost measurement at 1366 and one at 1502 for first quarter. And look how much costs have come down since 2014. So they have lowered the cost quite a bit, but it took them a long time. And, you know, their balance sheet, Coeur d'Alene, was a big, big mess. They had an enormous amount of debt for years on their balance sheet. They've done an enormous amount of stock dilutions. In the past, after the 2008 financial crisis, when a lot of people thought Coeur d'Alene was going to go bankrupt, I was buying their shares for pennies, and I made over 400% on that stock in about 18 months before I sold my entire position. But, you know, this company is considered one of the higher cost marginal silver producers, even though it's a senior silver producer, and they've been producing silver for over 70 years. Hecla is in the same boat. Hecla has, I think, approximately 13 million ounces of annual silver production a year. So between them, Coeur d'Alene and Hecla, that's almost 30 million ounces a year of silver production that's in jeopardy. So this is one of their cost figures at 1502, and I just showed you the silver price. Coeur d'Alene is not even making $1 an ounce margin at the current silver price. So that puts their balance sheet in peril. Yes, they do have 54 million in cash. Yes, they have sold a lot of their other non-core assets to raise cash to pay off debt, and they have lowered costs. But if you're not making free cash flow at your mine, and your margins aren't good, you're going to start burning through the cash on your balance sheet, or you're going to have to go back to the market, like I said, and sell debt or equity at very, very punitive costs, which long-term are going to hurt the company. The other thing here on the slide that I want to show, okay, here we go. This is the other thing I wanted to show is the all-in sustaining cost range. So this is how the original guidance was for much lower all-in sustaining costs, and now it's quite a bit higher depending upon the silver price. So these things showing that they're not, it's in the bottom here on slide 17. So this Coeur d'Alene is really not making much money. The other thing I want to add is that if you go, a lot of things with accounting with large corporations, especially publicly traded ones, is you really need a lot of times to, there's a lot of slides to look through. Hecla has even more slides. Hecla's all-in sustaining cost, the way they account for it and measure it, is even more confusing. I spent half an hour trying to figure it out. But the other major thing is that all these things, whether they're free, Coeur d'Alene was generating free cash flow in the first quarter of 2017, and so was Hecla, but it wasn't an enormous amount considering both of them have lots of production. Coeur d'Alene has 16 million ounces a year of physical silver, 4 million per quarter of physical silver, and a substantial amount of gold production, and yet I think they only made about $16 million in free cash flow. So it's not an enormous amount of free cash flow, but the things are the footnotes here in this, and if you look at the very bottom, it says it's non-GAAP. So all their free cash flow, if you go through their PowerPoint presentations, Hecla, Coeur d'Alene, you go through their PowerPoint presentations and look for free cash flow, and also look for their all-in sustaining cost measurements. While these are more accurate, a lot more accurate than in the past with just cash costs, these are also not generally accepted accounting principles. So these are more accurate, but also non-GAAP. So could be, what I think then is they're somewhat, in my humble opinion, is they're somewhat still understating costs. Now, I think especially Hecla. I think Hecla is understating costs a lot more than Coeur d'Alene, because Hecla is claiming a lot lower all-in sustaining costs. They're claiming, I think, $11 or $12 an ounce all-in sustaining costs, but so much of their revenues was really base metals per year. So it's getting really, really hard for these large senior silver producers that used to be more primary silver producers to replace the silver that they've already mined. So they're buying gold mines and they're buying silver mines that have a lot of base metals in it. So Hecla, a lot of Hecla's annual revenues are based on base metals, and then they have, you know, the accounting stuff with byproduct tax credits for their base metals. So I think, you know, Hecla's costs are, if they are lower than Coeur d'Alene's, they are only a little bit lower. So we're at a silver, the main reason I'm making this video right now is we're at a silver price now below 16 that has a lot of really dangerous real world consequences. So Hecla and Coeur d'Alene have cleaned up their balance sheets, but they are by no means in great financial shape. They can survive lower silver prices for a while, but if you're along in either stock as either speculation or a long-term investment, I would watch for the cash on the balance sheet of both companies if it starts to burn like crazy, if you see a lot of cash just disappear, and also what the costs are, and also if they start to sell, you know, out of a panic desperation, maybe I'll either start to borrow more on their revolving credit facility or sell senior notes or something like that at a high interest rate, or they start to dilute their shareholders again. So potentially, guys, for every 50 cents or $1, now that we're below 16, that the silver price goes lower, there could be a lot more than 30 million ounces per year in annual silver production in major, major trouble. In fact, you know, if I was a hedge fund manager and I thought in the short term silver prices could go quite a bit lower, I would consider shorting Hecla and or Coeur d'Alene, because they are not lower cost primary silver producers. They're quite higher costs. And yes, they have lowered their costs, but they're not lowering them fast enough. And it just doesn't look like there's huge, huge margins there. And they've already sold a lot of their assets to try to clean up their balance sheet, so there's not a lot of other things they can sell. So it's a very interesting time. If you are a trader, I know a lot of you guys don't like to trade metal, but if for an interesting trade, 2 or 3 years from now, you know, buying 10-ounce silver bars at current spot price, or 100-ounce silver bars if you have the capital to do that, for every 50 cents or $1 that the silver price goes lower, I think you have a good possibility to make 30 to 50% of your money as a trade 2 to 3 years from now. That you could pocket that cash as a trade when you sell that metal if you wanted to, and go and buy other assets with it. So, you know, obviously I have my long-term stake in physical precious metals, a lot of silver, but, you know, I'm considering going and buying more physical silver for a potential trade here, in addition to adding and stacking more physical silver. So be careful out there right now. There's a lot of, if you listen to the Nolan Watson interview, there's a lot of really bad deals going around in the mining industry that people are trying to do. So this could get a lot worse before it gets better in the gold and silver mining industry. The gold miners are a little bit better at this current gold price. It's not quite as horrible for the silver miner as it is for the silver miners. But if the gold price were to, say, break 1,200, even get to 1,150 or lower, then you're going to start to see gold miners in big trouble as well. But the gold miners are in a little bit better shape, I would say, than the silver miners right now. But it just goes to show you what I asked Nolan Watson, why Silver Wheaton and Silver Standard changed their names, and hopefully what you've seen, what I showed you with Coeur d'Alene and Hecla, how difficult it is to build a very large primary silver miner and continue to replace all those ounces of silver you've produced with high-grade, low-cost ounces. So a lot of companies can't do it. So what they're doing is they're transitioning into a gold-silver mix instead, or they're like Hecla and they're finding projects that also have a lot of base metals, which, you know, in the economic environment we have, I'm not bullish on base metals, except for really zinc. And I like platinum and palladium too. I think actually, guys, David Jansen, who's been a past guest on the show, he actually put out some articles recently that the lease rate for palladium was 18%. So there's huge physical shortages of metal, of palladium, on the London Bullion Exchange, on the London Metals Exchange now. Very interesting things. Hopefully that will happen with silver. Andrew Maguire has made some very interesting predictions. You know, Eric Dubin, who's a good friend of mine, he said he's never heard of any sovereign willing to put out information in public that they're willing to buy 250 tons of physical gold other than the IMF purchases. And I don't think anyone actually went onto the directly onto the open market to buy that physical metal. The money, the physical gold was just moved with a title that the IMF owned. Okay, guys, well, that's it for this week. Everyone have a great rest of your weekend. And if you have time, I did an interview earlier in the week with Dave at the X22 Spotlight Report, talking about how there's a lot of signs throughout, whether it's in asset markets or throughout the real economy, that credit is starting to decrease quite substantially. Well, thank you, everyone, for your time, and hopefully you enjoyed this short little video that a lot of annual primary silver miners and also the base metal miners who produce a lot of silver are in trouble the lower spot price of silver goes. You know, if we do have below 15 silver or below 14, there are going to be bankruptcies. There are going to be panic mergers and acquisitions just to save management teams' share structures and their salaries and things like that. So there is real world ramifications for this. This manipulation of the paper silver price has hurt emerging markets and, you know, caused a lot of people to be fired and ruin their lives as well. In addition to precious metal investors who, you know, have not had anything to show for it. Hopefully, you know, there will be good class action lawsuits in the future about all this. Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.